Did you know that taxes can be one of your top 3 expenses? Think about it. Depending on your marginal tax rate, you can be taxed between 20 to over 50% of your income. Taxes can seem scary and complicated and one of those rites of passage as an adult. Today, I'll be going over the basics of individual taxation here in Canada. Hi everyone, welcome back to my channel. My name is Gabrielle and I'm a CPA in both Canada and the US. And here on my channel, I like to talk about everything money and personal finances, such as saving, budgeting, investing, and even tax tips. Taxes have been around for ages and have been needed in society to fund for various social projects. There are a lot of different and strong opinions out there when it comes to taxes. However, today I'm not going into any of those. Instead, I'll be covering the basics of individual taxation here in Canada so that you could better understand how the tax system works and ways to minimize your tax liability legally. Tax rates. Canada taxes an individual based on progressive tax rate based on your income level, also known as tax brackets. This means that the more money you make, more taxes you need to pay. There are also 2 types of tax rates that will apply to you, the federal and the provincial or territorial tax rate. So for example, if you have a taxable income less than $49,020, you are in the lowest tax bracket of 15% for federal income tax purposes in 2021. If you made more than that but less than $98,040, you still pay 15% on the first $49,020 and then 20.5% on the next $49,020, which is the second lowest tax bracket. And this continues as your income increases. Let's not forget the provincial or territorial income taxes, which have different tax brackets and tax rates. In the case of BC, if you have taxable income less than $42,184, you are in the lowest tax bracket for 2021 of 5.06%. If you made more than that but less than the $84,369, you still pay 5.06% on the first $42,184 and then 7.70% on the next $42,184. You may notice that it's easier to just look at the combined federal and provincial tax rate table here. Your marginal tax rate is determined by the top tax bracket that is applicable to you. It is relevant as the additional taxes you will pay for additional income that you earn. So for example, if you earn $70,000, your marginal tax rate is 28.2%, which is the combined federal and BC tax rate. This means that every $1,000 of additional income that you earn, your tax liability will be estimated to be roughly $282. The marginal tax rate is different from the average tax rate, which is the total taxes paid divided by the total income. Your taxes are determined by your income earned during a calendar year, which is from January to December and is due by the following year of April 30th. If you or your spouse are self-employed, then a bit more time is given to you as your tax returns are due by June 15th. Now I'll be going over tax basics such as tax deductions versus credits. The difference between tax deductions and credits is that tax deductions directly reduce your income, which is above the line item, which reduce your tax liability based on your marginal tax rate. Whereas tax credits directly reduce your tax liability dollar for dollar. For example, if you have a taxable income of $70,000 and a $2,000 tax deduction, then it reduces your taxable income to $68,000 and decreases your tax liability by $564, which is calculated by $2,000 times 28.2%, which is the marginal tax rate for combined federal and BC. However, if you have $2,000 in tax credits, then it directly reduces your tax liability by $2,000. Tax credits can be refundable or non-refundable and varies by your eligibility. Non-refundable means that it reduces your tax liability to 0 only and any excess goes to waste. However, if you have refundable tax credits, it reduces your tax liability to 0 and any excess is refundable, such as the name suggests. And certain refundable credits can be your GST, HST credit, or working income tax credit. Make sure you watch until the very end on ways to earn additional income by being able to pay lower taxes, such as on investment income and business income from side hustles. Employment income. It's a type of income where you would pay the highest taxes since available tax deductions are very limited. So there aren't many ways to reduce your overall tax liability. The main tax deductions available for employees are pension plans, moving expenses related to job relocation, childcare, disability, and education-related expenses related to your employment. One main way to reduce your tax liability is through RSP contributions. And you may be familiar with RSP contribution due dates, which are due 60 days after December 31st in order to take the deduction for the previous tax year. RSP contributions reduce your income dollar for dollar, and the tax liability reduced can be calculated based on your marginal tax rate. Investment income. Income through dividends and capital gains are given tax advantages. For example, capital gains are taxed at only 50%. Dividend income that you receive from Canadian companies often come with dividend tax credits. For example, when you receive a T5 statement of investment income, there is a box for dividend tax credits, which reduce your tax liability on that dividend income that you received. In Canada, integration is a factor in where taxes paid by the corporation have been taken into consideration and passed on to you. So in fact, if you were to completely live off eligible dividend income and you have no other sources of income, you could actually receive up to $53,810 and pay no taxes. The Federal Alternative Minimum Tax, or AMT, only kicks in after you receive eligible dividends of $63,040, and your tax liability will only be $1,385 at the end of the day. The Canadian income tax system is designed so that the combined corporate and individual taxes paid on income earned through a corporation and then distributed to individual shareholders is equal to the income tax that would have been paid if the income had been earned directly by the individual. So of course, there are other ways to earn tax-free investment income through a TFSA or a tax-deferred investment income through an RSP. For more information on these types of accounts, feel free to check out my video here explaining the differences. Business income and expenses. If you're running a business, whether that is through a sole proprietorship, partnership, or corporation, there is more flexibility in terms of deductions that can be taken. Basically, any reasonable business expenses incurred to produce business income can be deducted, which reduces your tax liability at the end of the day. As a sole proprietor, there is no distinction between the individual and the business, so you report your business income and expenses on your own individual tax return. Common expenses of running a business can be home office. So for example, portion of your mortgage interest, electricity, utilities, internet, etc., or even rent if you don't own your home. You could also deduct vehicle related expenses such as the lease or depreciation, gas, parking, maintenance, etc. Other expenses are phone bills, travel, meals and entertainment, as well as legal and accounting fees incurred to run your business. So these types of expenses may already be part of your normal expenses as an employee, but if you run a business and incur these expenses to incur business income, they now can become deductible. There are also other legal and tax planning aspects to consider as to whether to operate your business as a sole proprietor or a partnership or corporation, but that is an entirely separate topic. And if you're interested in a video explaining the differences, then let me know in the comment section down below. So that was a summary of taxes for individuals in a nutshell. I hope that you came out of it with a better understanding of how individual taxes work here in Canada now that tax season is just around the corner. If you found this video helpful, don't forget to hit the like button as well as the subscribe and notification button down below so that you can be updated on any future videos that I post. If you enjoy these sort of videos, I'll link more videos here for you to check out. If you watch until the very end, thank you so much for watching, and I'll see you guys in my next video. Bye!